theorize about supply and demand in submarkets, in the smaller markets, but the trouble is there's not enough data to really be able to sort of crunch numbers and come up with anything meaningful like you can in Nairobi. I mean, these markets are all a tiny fraction of the size of Nairobi. So I think it's an interesting point, and I think, you know, as those markets continue to develop, it'll be something that we keep an eye on. And maybe we should be making some reference to them in the future. I think it's something we'll bear in mind. In terms of leveling up the supply and demand balance and avoiding sort of this boom and bust thing in different areas, it's difficult. People have wrestled with this for a very long time, but in lots of markets. But I think a lot of it is availability of finance, and this is what will happen to drive boom and bust more and more in the future. Because all it will take is for a couple of empty buildings to cause a couple of defaults, and then the banks will go, oh, we don't want to do office buildings anymore, and they all sort of follow each other, and so then no one will be able to build. And this is what drives in sort of in European and US markets. Very much it's the availability of finance that drives boom and bust. Here we're not in that position at the moment. The banks are still they lend conservatively, and kind of it's not a bad way to be. So it's more the developers doing the research, using people like MML to advise them what to build and where to build it. And I think if people are looking down the pipeline and they're saying, okay, should we be delivering, just because we own this piece of land doesn't mean we need to put an office building on it. Maybe we should think again, perhaps it could go and be a hotel, perhaps it could be residential, perhaps we just don't develop it for a couple of years. So I think if people are more careful in the research that they do, when they're planning what to do with their land, then I think it would very much help to avoid these problems. Now, reasons for this parking, the desire for more parking spaces, it's the fact that people are relocating out to more peripheral nodes. So people can't rely so much on public transport. There's also the issue of density and office space is increasing. There are more people working per square meter of office floor space now than there were previously, and obviously increasing car ownership. So all of these factors are coming together to mean that really people need parking. Now, what does that mean for the road system of Nairobi? It means more congestion or more decentralization. That's the unfortunate reality of life. It's going to be very difficult for, even with the road building program that's ongoing, for infrastructure to keep up with this level of increase in demand for parking spaces. But those who do provide will benefit from it. The other thing we looked into is fractional sale office market. There are two modes of delivering office space. One is you raise the money, you build the building, and you rent it out. Now that is the traditional way on an international level of the developers will deliver office buildings to the market. What we're seeing here is very strong market in fractional sales. And so that in that case, developers will plan a building, forward sell it by parts as much as they can, and then use the funding they're making from the fractional sales to help develop the building. It's unusual on an international basis, and we don't see it being a long-term trend in the Nairobi market, but it does assist developers to be able to finance their buildings. And you can see that quite a substantial proportion of offices being delivered next year will be fractionally sold. So thank you very much. I think, just to summarize very briefly, we are seeing a dangerous oversupply of office space. That could lead to risks of default or anything else in the market if it carries on, this trend carries on the way that we predicted. However, there's still good demand and good take-up levels. The underlying economy is healthy in terms of office space. Take-up levels are predicted to continue to rise. And if people deliver the right space in the right places with good levels of car parking, then their office buildings will do fine.